You clicked on this video because you're thinking about buying a house soon. Could be a few months from now, could be a year from now, and you know you have to save up money, but you don't know if you should save up for the house first or you should save up some kind of emergency funds first. Well, I've been a real estate agent for about 8-10 years now. It's not 10, I'm exaggerating, 7 or 8 years. And I've seen it all. I've seen people barely have enough money, use down payment assistance, get closing costs, and buy. I've seen people who have well in abundance saved up. And I've seen people in the middle. And today's video, we're going to discuss what's really the best option for you, or at least give you my opinion on what you should do. I am not 100% the law here, so feel free to take my opinion, take what you like, and go look at other opinions and see if you can determine what's best for you and your family. So let's talk about the pros and cons of each side of the spectrum first, and then I can tell you what my opinion is going to be. Side A, which is the realtor who's going to tell you you should save up everything for your funds first, then your savings, definitely has a lot of cons, but it does have some pros. And now you can type your comment saying, oh, you're a realtor, of course you're going to tell us to do that, but just hold on, just trust me. Now, one pro of this side of thinking can be that you get to be in your house sooner. One thing that's going to be thrown at you is like, well, you'll be able to secure the interest rate sooner. You'll be able to, get the purchase price sooner because prices are going up. So you get to get it here. So that way you can start building equity, and you essentially lock in your situation then and now. But a con to that, which I find to be a even bigger con than what the pro is you're going to severely limit your ability to save when you buy a house. Right now, you either have a lower rent or because you're in an apartment or maybe a small house, or maybe you're living with family, you're not really contributing a lot or the whole entire payment. So you're able to save a lot more. And what people don't realize is once they have a house, their expenses go up significantly. We're not just talking mortgage. We're talking like, utilities. We're talking about emergency things that might pop up, like your water heater might burst, or your realtor might show up needing to spend the night because he got kicked out because his wife kicked him out. Like there's all kinds of things that could potentially pop up. Your ability to save is going to be significantly decreased. So are you going to be able to start building your savings as much as you want to when you finally buy the house? Or are you going to find yourself in this never-ending cycle of, I got the house and I want now, great, amazing for me, but as soon as I start saving my emergency savings, it all gets depleted when something happens. You're going to put yourself in a bad spot if something happens. Like when it comes to budgeting or anything, I always think of the worst case scenario. And I always imagine whatever is going to happen that month will be the worst case scenario. And God forbid you're driving, you get in an accident, there's some kind of health problem that comes up, your AC burst, maybe you need to lend a family some money or something. You're not going to be able to do that because you're going to be buying a house but have nothing in the bank. And now your income is going to be to try to catch up to that expense amount, and you'll start seeing that your savings will significantly drop. But the second reason also is, part of the fun of buying a house is being able to move in and get some furniture, get some remodels, paint some rooms, or, change some things up. You're not going to have that ability to do that if you're buying and left with nothing. I don't recommend you use all your money to buy the house and be left with nothing, or maybe you have no money and you go use a down payment assistance program and you're fortunate enough to get closing costs by the seller and you're still in the situation where you're left with nothing. Now, on the other side of the spectrum, we're talking you need to have 6 months of reserves before you even think about buying a house. Let's not get it twisted. Of course, that's the best solution. That's amazing. That's like these gurus out there that are saying, yes, you need to have 6 months reserves or debt free before you buy a house. Of course, that's like me saying, yes, do not be bad. Do not be evil. I'm pretty sure I'm not going to get a Nobel Peace Prize for my amazing statement of saying that, because yes, it's definitely the golden standard. But let's be real here. It's not very feasible for most people. It is a golden standard that you should try to get. And if you're in the very, very small percentage that you're able to do that with opportunities you have or just extreme savings, then amazing, good for you. If I applied this thinking to my personal life, my wife and I, we bought our first house when I was 19, she was 20. We had our first baby there. We would have never got that house. It was a little $80,000 house in Phoenix. It was like 7-8 years ago. And we would have never got it. And what we did with that house is we sold it. we paid off all of our debts and we then bought our second house. Well, according to the standard, we wouldn't have been able to do that. And now we're in our third house where we're in the neighborhood we want. It's the best school district for our kids in this area. And now we get to give our kids an amazing school experience and amazing life here. Well, if I would have followed these tenets, I would have never been here. I would have been pinching pennies, down the road. And sure, maybe eventually I would have moved here, but I would have robbed my son and daughter out of the first 3 to 4 years of their school life in this great district. Now, that's just my example. It could be different for you. I understand that, but it's not okay to, one, judge people because they can't live up to the golden standard, and B, make yourself feel terrible for not being able to do it. I have to say, I don't agree that you should go for that. I don't think you need to have 6 months reserves and then have your down payment and closing costs saved before you consider buying a house. I just don't. I think you're good while you're saving and you're trying to pinch pennies and living this life to pay off debt, which I'm sure eventually you'll get to that point. You're robbing yourself out of years of potential growth. My opinion is it's going to be somewhere in the middle. It's going to be a nice gray area. Having some kind of reserves in the bank, having some kind of down payment and closing costs in the bank, and having those be completely separated. Okay, 2 different categories. First things first, what I need you guys to establish before we figure out from this point is what is your rate of savings right now? How much are you able to save per month? You should have this number dialed down and use this number, put it on a freaking whiteboard, and you should never not save that amount of money. To me, I personally would like for you to have maybe 2, maybe 3 months reserves, but I also understand that, that might be a little tougher. So this is why I asked you to find those numbers, because if right now you have a high rate of savings where you're able to save a good amount a month, like you're a few $1,000s a month, where you're able to save up your down payment amount pretty like within 3 or 4 months, then maybe you don't need to have 3 or 6 months reserves. Maybe you just need to have 1 month because you made some good life decisions, you're making good money, and let's not get it twisted. Maybe after you buy, you'll be able to save up again, or maybe you'll be able to wait another month and then have the rest of the money saved. And if you're on the other side where you're only able to save a few hundred and it's taken you now but 6 months to a year to save your down payment and closing costs, then I really need you to consider to have at least 3 months of reserves. When you're living on such a tight budget and something goes wrong, it's going to be so bad. If you only have a month reserve, it's going to affect you, and you're not going to be able to catch up to that savings, especially once you have the down payment and the closing costs you need. I would rather have 1 to 3 months of reserves in one account, or just separate it on my finances, and start saving up your savings and your down payment on this side. You don't need to have all of it 100% saved up. Maybe you're still saving every month because, right now it might take you 1 to 3 months to buy the house. So as long as the majority of it's there and you're still able to save at a rapid rate, then you'll be fine, right? But it's important that you have those 1 to 3 months though, because once you buy the house and you use all those housing expenses and now you're in the house, have that emergency fund of just in case, right? Just in case something goes wrong, or maybe something breaks in the house. Keep that aside, start building another savings account for housing expenses. Maybe have a separate savings for like furniture or things you want to upgrade with the house. If you watch this and you're still not very sure how financing works and what you should put 3%, 5%, or 10%, I have a video where I discuss the pros and cons of FHA and conventional, which basically breaks down the main differences between a 3.5 and a 3, 5, 10, 20% loan. That video is here. And if you really want to know if you should save 3 or 5% to help you buy a house, this video is here, and that'll help you figure out if it's really worth saving that extra 2%. Thank you guys so much. Have a good day.